What's up, guys? It's Morgan from Lynchpin. I have another video that is the US housing market. It's 10 of the most populated metros that I've done that video on. This one's going to be specifically for my Utah peeps. Not only do I live here, but also I have friends and family who want to get my opinion on the market. So I'm going to give it in this video. If there's enough people that want certain states done, I could definitely look into doing some of those when I get a chance. Currently, I've just kind of focused on those for that reason. So take a look at the overall housing market, but also keep in mind that you can get access to the spreadsheets to kind of see what I'm looking at and then apply that to the counties and states that you're looking at. So let's get into this video. All right, so on this first page, I went ahead and I consolidated a bunch of the charts so that you can see how low active listings are on a column chart for most of the counties, with the exception of Weber County. And I focused on the 5 most populous counties in Utah because I think they're a good bellwether, but obviously everything's more localized. So you're going to want to look at your specific county or even city level to determine, what cities and counties are growing and going up and what are limited. You'll notice on median home prices by month by county, pretty incredible right now where home prices are at. And when you look at inflation has been significant. Obviously, you all know this. You've all seen it and experienced it. Don't need to tell you. But then on top of that, I have the seasonal trends based on home sales and prices from 1999 to 2018, and then the 30-year mortgage rates. Now, keep in mind, these are rising, but technically, when you look at it on a historical level, this is still relatively low territory. Then, whether correlated or uncorrelated, the opinion's out for me, but we have the S&P Case-Shiller Index, as well as the University of Michigan Consumer Sentiment Survey. Our economy is driven by consumerism. So when consumers aren't happy, I feel like that usually leads to the economy entering a recession. So I'm expecting a recession here within the next quarter or two. And on top of that, I think that's going to depress home prices or at least level them off somewhat. I still think there's a lot working against it. Again, we'll see if I'm right. It's just conjecture. So for the 5 counties, here's a breakdown of active listings by month. So these are the averages over the time period as well as the current. So you'll notice we're at about 1/3 of the normal listings, which looks really ridiculous when you actually put it on the graph. Now, keep in mind that this time of year does have the lowest amount of listings. I understand that, but still we are historically low. I mean, look, you're usually having 1,200 in Washington County. Right now you have 473. Look at Davis. The only one that's outperforming in this regard is Weber. Now, if we scroll over and look at home prices, you'll notice that as well, home prices have been going up. Even Weber has seen significant appreciation, even though they're the only ones above average on that right now. So that's kind of an interesting trend or piece of data there that I found. But again, I want to talk to the seasonality of the markets. So you can see right here, January, February is usually the bottom for the number of home sales that occur. And then median prices usually tap out in that June to August range. As you can see, that's pretty consistent across the board. There are a few outliers, April, May, June range, but for the most part, June, July, August tend to be the biggest ones. Now, affordability and sentiment, again, notice this trend. Notice how extreme both of these got. I'm interested to see once interest rates tick up and what supply and demand from finished homes look like. Now, this is the US national average, so keep in mind that this isn't specific to Utah, but on a macroeconomic level, I think it's relevant. Now, if we look at inflation, everybody knows they're getting crushed by this right now. It's pretty ridiculous. Even with raises right now, I know a lot of people have said it hasn't even made a dent. I haven't even made it back to essentially break even due to inflation. And it's the truth, unfortunately. It's gotten so out of hand. And that's why I think when I think about it, a lot of my conjecture about the market being overvalued, too hot, not sustainable, et cetera, it has a lot to do with that. I just don't see how this can sustain. And if it does, there's got to be a lot of policy changes and things that move quickly. Government doesn't move quickly at all. So that's all I'm gonna say is like it's the same thing with the Fed. I think they want to prop markets enough. They're either gonna overestimate or underestimate. I don't think they're gonna hit a sweet spot and properly try to stop this. I think they're gonna miscalculate one way or the other, and literally they back themselves into that corner. So I'm not looking forward to whatever it is, but I have so little faith in their ability to contain this that I think something's got to break one way or the other. Now, if we look at interest rates, historically, we're on a level that's still relatively low. That's what's kind of crazy about it. But at the same time, affordability dies a horrible death when you have this situation of super high interest rates. So it's going to be interesting to see how fast the Fed raises, because they're talking about 7 raises, even at 25 basis points or 0.25% a raise. I think they're going to miscalculate either too much or too little, and that's going to lead to a real problem. So listen, it's like I say, I think there's going to be an overcorrection one way or the other. I don't know that this is going to be 2008 all over again, but admittedly, there's a lot of similarities in my opinion. Even if the fundamental issues are different, there can be related consequences in regards to what happens. And that's where I kind of land is, even if some of these things are different, fundamentally speaking, there's only a few things that can happen. And that's where I kind of land where, hey, if you need to make a move and you're planning to stay in your house for the next, 15 to 20 years, I think you got to do what you got to do. I'm no expert. I'm not a real estate agent, but looking at the statistics, looking at history, using my knowledge of kind of the cyclical nature of markets, it really leads me to believe that at some point this has got to correct, and not just a tiny correction. I think it's got to be rather significant. Now, is it going to be 2008 level corrections? Who knows? Nobody can tell you that. I don't have a crystal ball, neither do you. But I'd love to hear your opinions on what you think it'll do and why. These are just some of the things that I think are going to be part of the scenario and have some form of significance if and when it does correct, because I know it will correct at some point. The question is how much and why. And I think it's going to be a combination of these factors. I don't think interest rates alone will do it, but you've got geopolitical discord and all of these other things going on. So that's just my thoughts. I'd love to hear yours down below. I'll look to do an update probably within a month or two in regards to, again, the Utah housing market, the US housing market. And then if there's enough want or need, maybe I can hit a couple of other states for you guys. The channel is around crypto, housing market, trading stocks. So all of this is relevant in my opinion, and do your own research. I appreciate you so much for stopping by. Hope to see you again real soon. Bye.